Stocks on Wall Street close at record highs a day after the Fed cuts rates. Nasdaq surges over 200 points. Stock futures also remain little changed after market rallies to all-time highs. Asian markets trade mixed as investors await Bank of Japan's rate decision. The GIFT Nifty is indicating a lower start for our own Indian market. Crude prices settle lower as traders assess US stockpile data and the Federal Reserve's rate cut. Meanwhile, gold too takes a breather as markets weigh Fed's policy stance. SEBI clears Adani Group firms, Adani Ports and SEZ, Adani Power and Adani Enterprise of all Hindenburg allegations. Regulator finds no evidence of insider trading, market manipulation or shareholding violations under the SEBI Act. US President Donald Trump is expected to dial Chinese President Xi Jinping later today to finalize a deal on short video platform app TikTok. Good morning in the Mumbai News Centre. I'm Bamakshi Doria and you're watching Power Breakfast. Well, it's the last trading session of this week and to begin with, the handover that came in from Wall Street is extremely strong. We saw all three indices, trading higher, and in fact, they closed at record highs. And not just that, even the Russell 2000 managed to close at a record high, which we've not seen since 2021. So it was a broad-based rally that we saw as far as Wall Street is concerned. But, taking on from that, the Asian markets, however, are not reacting to that because, we are seeing the Taiwanese index is trading lower by almost 0.3%. The Seng is also lower by around the same, quantum. The Kospi is down almost 0.5%. Most of the Asian market peers are trading mixed. But on the flip side, when we look at Nikkei, that index is doing quite well. Keep in mind that Bank of Japan's interest rate decision is expected to come in today. So Nikkei is trading higher by almost 0.75%. Yesterday we didn't see any contribution coming in from New Zealand, but that index too higher today. So is the Australian index. Overall, it's a mixed looking screen as far as Asia is concerned. But let's take a look at what the GIFT Nifty is indicating, a lower start. So, again, today, Indian markets are marching to a beat of their own. But moving on then, how will all of this impact our own Indian market? We have our research team joining in with how the trade setup looks like and the stocks that are likely to be in the news. First up, Hormaz joins in to get us all the market cues we need to watch out for today. Good morning, Hormaz.
Good morning, Bamakshi. Perfect trading session, right, on expiry day. And I call it perfect not because the Nifty ended higher, but because it gave an opportunity on both sides, both to the bulls and to the bears. Now, if you booked profits at higher levels in the first half of the trading session, you made money. If you bought that dip at 2:30 in the final hour of the trading session when the markets recovered from the lows, and you made money there as well. So therefore, a perfect trading session. Now, it's been a very good week for the markets. We started off by saying that 25,154 is a key level for the Nifty, post which it opens doors for 25,500. We are at the cusp for the index on 25,500. Same for the Nifty Bank as well. 55,000 was an important level, post which 55,300 and 55,700. We are above both those levels now on the Nifty Bank, and that opens the door for 56,000 now for the Nifty Bank. And as far as the Nifty is concerned, it is the 25,500 mark that remains that psychological level to watch out for on the upside. Now, crossing 25,500 on the Nifty can open doors to levels of 25,669. And why 25,669 is important is because of the fact that it is the highest level for the index seen in 2025 so far. So that remains an important level. Of course, 56,000 is also significant for the Nifty Bank simply because it has not closed above that level since the 30th of July. So almost 2 months now. So important levels to watch out for on the Nifty Bank as well. What else to watch today? Adani Group stocks, of course, they will be in focus after the SEBI decision late last night. Multiple IPOs opening, price bands coming out. There will be listings as well, Satvik Green Energy and a lot of other IPOs opening today. Watch out for volumes in the mid caps and the small caps because the stocks that are moving on very, very high volumes, be it the likes of IRM Energy, Shalimar Paints, Poonawalla FinCorp. All of them saw gains in double digits yesterday on very, very strong volumes. For now, 25,500 on the Nifty, 56,000 on the Nifty Bank. The GIFT Nifty is indicating a slightly subdued start. It promises to be a very interesting session, the final one this week.
Absolutely, Hormaz. An interesting session is what we're watching out for, and a lot of stock-specific action as well. But over to Ria, who will actually list out all the stocks we need to watch out for in today's trading session. Good morning, Ria.
Good morning, ma'am. Actually, let's take a look at the stocks that are going to be in focus today. The first one is JSW Energy. The company's board has approved a demerger scheme to acquire GE Power India's Durgapur unit via a share swap. Unichem Labs has received a demand notice worth 19.5 million euros from the European Commission. Texmaco Rail to be in focus on the back of an order win worth around rupees 87 crores from Ultratech Cement for BCFC wagons and a brake van as well. For Vedanta, they have been declared as the preferred bidder for the Punam manganese block in Andhra Pradesh. Indian Hotels to be in focus. They have issued a clarification saying that recent media reports on IHCL are misleading and that IHCL does not own the PR in New York. Samir Modi of Godfrey Phillips has been arrested by the Delhi police on charges of rape, and he is going to be presented before the Saket court tomorrow, so the stock can be in focus on the back of that. And the last one is One MobiKwik. They have confirmed that there was a technical issue on the 11th and 12th of September, which led to certain failed transactions which were marked successful. An FIR has been filed and over 200 arrests have been made on the back of this, and 2,000 accounts have also been frozen after this issue.
Thank you so much for bringing us all of those details, Ria. And finally, we now have Sudarshan joining in with cues from the F&O space. Good morning, Sudarshan.
Good morning, Mamakshi. So it was another day of short covering, and now most of the indices are near to very important levels. And for Nifty, it would be important for Nifty to hold on to levels over 25,300 to move higher. So yesterday we saw that Nifty manages to hold on to levels above 25,400. And now if today we get a support from heavyweights, it's very much possible that Nifty may move higher towards 25,500. And the support continues to come from biggest heavyweights, and that are from Nifty Bank and Nifty IT. As far as flows are concerned, again, both FIs and DIs were on the buy side. FIs yesterday in the cash market have bought more than rupees 1,100 crore, and the similar pattern was seen by DIs also. And now with this, FI long exposure has increased to 14%. Now, volatility index, it's very interesting pattern that's showing. It's near record lows. Yesterday it has slipped below 10, so we'll have to track that also. And on the put call ratio, again there also it was a minor dip. It has fallen to 1.16 versus previous day's close of 1.20. On the option front, the option on the call side, 25,500 and 25,450, both are very active ones, and with premium increasing for both these call options. But in contrary, on the call side, 25,400 has seen premium falling down from the level of 71. So now, for now, the support for Nifty is around 25,350 to 25,400, and resistance has moved higher to 25,520. If we manage to cross that, next resistance comes around 25,650. As far as Nifty Bank is concerned, so support would be 55,527 and resistance would be 55,850. Three stocks that are in the band: RBL Bank, Angel One, HFCL has entered the band again, and one stock that has come out of the band is Oracle Financial Services.
Well, thank you so much for that, Sudarshan. But, keep an eye out on all of these Adani Group names. And that is because market regulator SEBI has cleared Adani Group firms, Adani Ports and SEZ, Adani Power and Adani Enterprise of all Hindenburg allegations. And Yash is actually joining us with more details on this. Yash, over to you. Yash, I believe you're on mute. If you can please unmute yourself.
Yeah, I'm sorry. So it is important to note that it's not an interim order, but it's actually the final order, which has come from market regulator SEBI, which comes as a huge relief for the Adani Group as well as its chairman, Gautam Adani. What market regulator has done is that it has cleared Adani Group as well as its chairman, Gautam Adani, from all the charges which were leveled by the US-based short seller Hindenburg Research. Importantly, a market regulator SEBI was investigating two important charges. One was related to siphoning of funds, and second one was with respect to hiding related party transactions. As far as SEBI's order is concerned, it has said that it has found no evidence. First one, with respect to hiding of related party transactions, that's because when these transactions were conducted with the unrelated parties, this definition of related party transaction did not come into place because that only happened after the 2021 amendment, and hence these charges don't really apply as far as related party transactions are concerned. Second one, as far as the loans which are in the picture are concerned, which SEBI was investigating, according to SEBI, all these loans were repaid back to the entities with the defined interest which they carried, and hence there was no fraud or there was no, unfair trade practice which was conducted as far as, these loans itself are concerned. And with, that investigation and both these charges coming to an end, all the proceedings against the Adani Group as well as Mr. Gautam Adani stands dropped at this point of time. Remember, in Jan 2021, Hindenburg had leveled various charges against the Adani Group. Two important charges out of them were that, there were related party transactions, and these related party transactions were hidden from the regulator, from the larger public. Also, there were various loans which went out of, Adani Group companies to other entities, and through which there was a lot of benefit which was taken by the listed entities like Adani Ports, Adani Energy, so on and so forth. So importantly, market regulator investigating all those charges, coming out with a final order against the Adani Group, saying that all these charges, there has been no evidence which has been found in the proceeding against the Adani Group, comes to an end, comes to a halt after all those investigations ended with a clean chit being given to the Adani Group and its chairman, Mr. Gautam Adani.
All right. Thank you so much for bringing us all of those details, Yash. But let's slip into a very short break. Up next, we get you all the cues from Wall Street, so don't go anywhere. Welcome back. You're watching Power Breakfast on CNBC TV 18. Now let's recap what happened with Wall Street. Major indices closed at record highs on Thursday, just a day after trading with volatility in the wake of the Fed's rate cut. The S&P 500 and Dow Jones closed with healthy gains, while the Nasdaq nearly rose 1% to close at a fresh all-time high. The gains were aided by shares of Intel skyrocketing after signing an investment deal with its competitor Nvidia. The deal sees Nvidia invest $5 billion in Intel with plans to co-design chips. Moving on then, the Federal Reserve's committee showed a united front in deciding to cut rates by 25 basis points, except for one outlier in Stephen Miran, the newly sworn-in Fed governor by Trump, who advocated for a 50 basis point cut. NEC Director Kevin Hassett tells CNBC that Stephen Miran acts independent of the White House interests. Listen in.
Stephen's analysis, I think that it's heartfelt. It's not dependent on, any partisan influence from the White House. He's going to go out there and he's going to do his job well. He's going to be an independent Fed governor. I think that exactly what the correct interest rate is and how the Fed should react is something that's a work in progress. The Fed needs to watch the data come in. Are the inflation numbers that are not as low as we would like going to get worse? Is the growth number going to get better but be all supply side? And so I think that having data-dependent decisions is the history of the Fed when it's at its best, and it looks like that's what they did today. And I think that's what anyone who's trying to do the job well should be doing.
Meanwhile, University of Pennsylvania's Loretta Mester spoke about the supply issues in the labor market and how the Federal Reserve is trying to tackle the same. Listen in.
There's supply issues going on in the labor market as well as demand. And so if you think, well, how much, labor force growth do you need or payroll growth do you need each month to keep the unemployment rate constant? A lot of estimates are in the, 50,000, 30 to 50,000, 40 to 50,000 range. And we've seen the last couple of months the labor market not produce that many. So again, you see the tick up in the unemployment rate, but not a huge tick up yet. And so what the Fed, I think, is trying to do is manage that downside risk to labor, at the same time leaving policy somewhat restrictive because they do have this higher inflation. And the higher inflation is not necessarily only because of tariffs. If you look at core services, taking out housing, that has been, sticky. And so they're going to have to continue to look at the inflation part of the mandate.
Well, former Federal Reserve Vice Chairman Roger Ferguson, meanwhile, says President Trump should not put pressure on the Federal Reserve to drive down prices. Take a look.
The president has to be a little careful here. Trying to drive down the short end of the yield curve is not necessarily going to result in anything but uncertainty out at the long end, with inflation premiums starting to rise out at the long end. And also, anything that undercuts the independence of the Fed, I think, is not going to help the long end as well. So you're absolutely right to say this, that a 25, maybe 50, maybe even more on the short end is not guaranteed to reduce the borrowing costs for the U.S. at the long end or for others who are out at the 30-year end of the curve.
All right, moving on then, US President Donald Trump is expected to speak with Chinese President Xi Jinping today in a critical call that could finalize a deal for allowing TikTok to continue operating in the US. The conversation may also pave the way for a potential leadership summit to resolve ongoing trade tensions. Trump, who has credited TikTok with helping him win another term, says the US holds the platform's fate in its hands. Officials say a framework deal has been reached, but key issues, including ownership, data privacy, and control of TikTok's algorithm, remain under discussion. Well, on that note, let's slip into a very short break. Up next, we get you cues from the commodities market, so stay tuned. Thanks for staying tuned into Power Breakfast. Now, in a significant development, the US has revoked key sanctions waiver for Iran's Chabahar port, a move that could impact India's strategic plans in the region. India has invested heavily in the port, viewing it as a vital trade and connectivity link to Afghanistan and Central Asia. But with the waiver ending on September 29th, Indian firms involved may now face US sanctions. New Delhi hasn't responded yet, but this poses a serious setback to its regional outreach. Well, moving on then, let's focus in on the world of commodities. Manisha Gupta is here with all the updates. Manisha, good morning.
Morning, Mama. Thank you for that. I'll start with the crude oil prices, where we are looking for a second weekly gain for this one. There is a very strong, important statement from the U.S. President Trump yesterday saying that he prefers cheaper oil over additional sanctions on Russia. So that tells you that perhaps the near-term supply disruptions that the markets have been anticipating are as of now ruled out. The other is the U.S. Fed cut rate, and indicating more on such is a double sport whammy, really, because on one side it is supportive of many of these dollar-denominated commodities, but more rate cuts also mean that there is weakness that the U.S. Central Bank will have to work with. In the meanwhile, we also have seen weak economic data coming from China, and that seems to be moving on to the prices right now. For the U.S. markets, while we have seen a very sharp decline in the crude inventories, but it also is about distillate stocks where you have seen an inventory gain, telling you that the demand is not so strong. So is the reason, even as we are heading for a weekly gain, it's not so much of a run-up that we are seeing in crude. That exactly is the same thing that we are seeing in other commodities also. You have copper prices now trading at a 2-week lows. Gold prices have come off by nearly $60 from its all-time highs that we saw just ahead of the U.S. Fed meeting. Same is the case with silver. It's down nearly 3% since the U.S. Fed meeting. We are looking at also declines coming in for the metal prices. So whether you look at steel, iron ore, we are looking at some declines continuing for that too as we head towards the weekend.
All right, moving on then, a powerful 7.2 magnitude earthquake struck off Russia's far eastern Kamchatka Peninsula, shaking buildings and triggering a tsunami warning. Local authorities have reported several aftershocks and issued a tsunami alert for the region's east coast. Kamchatka's governor urged residents to stay calm, saying no damage has been reported so far. The Kamchatka Peninsula lies on a tectonic belt known as the Ring of Fire, which surrounds most of the Pacific Ocean and is a hotspot for seismic activity. Well, that's all we have on this edition of Power Breakfast. Don't go anywhere. Bazaar Morning Call takes all of the action forward.